Asset Business Solutions conducts monthly webinars that address various topics. We invite a variety of speakers to teach, educate, and guide us through different asset management processes. I would like to thank those of you who attended the last webinar. Our sincere apologies to those who were unable to join because we reached the maximum limit when the webinar was just beginning. However, we have expanded the limit today, and that is unlikely to occur. Just one housekeeping rule: because of the limited time, you may not be able to actively contribute during the session, but I encourage you to type your question in the chat to be answered after the presentation. About Asset Business Solutions. Asset Business Solutions Limited is an asset management company registered in Uganda in 2011. ABS aims to address the significant gap in the country and Africa in physical asset management. We develop and provide innovative and dynamic tools and solutions enabling effective and efficient asset management for our clients. ABS helps organizations unleash their potential of their assets to drive the organization's performance with the goal of achieving an optimal return on investment. We are passionate about promoting the discipline of asset management best practices in the country. ABS is affiliated to the Institute of Asset Management in the UK and is a platinum partner to Hardcat Australia, the pioneers of digital asset management. During the 10 years of our operations, we have observed that a vast majority of both private companies and public institutions have a reactive approach to asset management, implying that they do not have good asset management practices. At Asset Business Solutions, we would like organizations to check themselves and know how the state of their assets management competence so that they can embark on a roadmap to better asset management and know how and what they need to do. This webinar aims to help organizations know what is required to move away from reactive and inefficient asset management practices and start on the journey and progress incrementally to achieve proactive and more efficient practices. Our speaker for today is Mr. Chris Kakyo, a qualified asset management professional from the Institute of Asset Management UK, who has served on the management team at Asset Business Solutions for over 10 years. Mr. Chris Kakyo, you are welcome.
Okay, thank you, Elijah, for that introduction. And I'd like to thank everyone that has been able to join into this webinar to listen to me, to know what I have to say about asset management. Our theme today is starting your journey to better asset management. And today we'll be looking specifically at the 6 key factors to consider. And we'd like to see that as before you start your asset management journey. As you can see there, that is an indication of the assets we'll be looking at, the ones that we are trying to take consideration of to manage. Now, usually when people are beginning on any journey, we really feel anxious many times. We have fears very many times. And most of the times, because of the level of these anxieties and fears, we never start these journeys. And so the same applies for asset management. Many times organizations do not take an effort to start on the asset management journey because we experience that many people find that asset management is quite a hassle. And because it is quite a hassle, they'll really not put a finger on trying to solve that kind of situation. And I believe that everyone, or many of you on this call, or let me say actually everyone is an asset manager in some sort of way because they have assets. Or if they don't have assets, if you are in an organization, you must be having some assets you manage yourself personally, or there is an asset manager. Now, for the asset manager specifically, I hope that during the 30 minutes that I make my presentations, I'll interest you enough to know that actually asset management is something that your company should take very seriously, as you find out from my next slide later. So what are we going to look at today? Today, our content will be, first we look at why should you start the journey? Then what are the 6 factors you should consider before you start the journey? And then finally, we'll take the first steps on our asset management journey. Now, an asset management definition is very important. We'll get that later. But let's look at the common characteristics of over 75% of organizations in Uganda. And these could be private companies, but they can also be private entities. They could be private entities. They could be municipalities. They could be organizations involved in infrastructural development, or they could be non-governmental organizations. And our observation is that over 75% share these characteristics that we are going to look at. And I'm sure you feel yourself in very many of these characteristics. The first characteristic is that in 75% of the organizations in Uganda, their budgeting is done by departments as far as the life cycle activities of asset management is concerned. So you'll find that the operations department, for example, has their own budgeting for assets. The maintenance department has their own budgeting for assets. The administration department has their own budgeting for assets. Everyone just has their own budgets. And that means that the total cost of the asset is never really known precisely because everyone has their own budget around that. It's not a collective effort. And because they are poor asset management, most of the time we realize that they have reactive response to compliance. What is an example I can give in here? We've observed that for many of these organizations, when the year is about to close, many of them become very reactive to compliance in the area of, say, asset verification, or if they want to respond to the management letter, whatever the management letter was saying, they always do that towards the time around the auditors are about to show up. And then the panic buttons are usually pressed around that time. So we get all these people calling us to come and help us, to come and help them to respond to how we can sort that compliance that they need to respond to. And then the decisions around assets are taken in the different silos that they operate in. That would mean that maintenance takes their own decisions around asset management. Engineering makes their own decisions around asset management. Administration makes their own decisions around asset management. It's not a collective decision. So ultimately, that affects the total cost of the asset in the end. And more often, you're going to realize that you're spending so much and you shouldn't be doing that. We also realize that companies do not have the culture of auditing. And auditing really is a practice to check what you have. In other words, you believe that a certain set of information or a certain set of data that you have is supposed to be correct, and you want to go and check the correctness of that. Now, because, first of all, if they're working with asset registers, for example, because they do not even believe in the asset registers, the auditing culture really is not necessary, because for them, they feel it's not necessary because they already know they do not have the good information that they need to use for that. And so that becomes a problem. The other observation is that they have impulsive cost expenditure. A user requests for an asset. He says, okay, guys, we need to buy a tractor for Bundibujo. So a tractor is bought. We need to buy a laptop for Chris because he has requested for it. He's broke down last evening. So the manager makes the decision impulsively to buy another laptop, for example, but they may not check where else a laptop might have been bought and it is in the store somewhere. But because you do not have information, you may not be able to manage that. Then there's reactive maintenance. Then there's reactive maintenance, then and that is because you have poor asset management. You cannot conduct good asset management. There's poor asset care and high risk exposure. Because of poor asset management, that is very common for over 75% of organizations. Now, if you feel yourself in this, what I've just described, just know that you have poor asset management and you really need to do something about it. As you'll see, I call it poor crop. You're going to see what the crop is all about in the next slides. Over there, you see a nice image of over there that shows if you felt yourself in the scenario I've just described, it means you are on the innocent stage of your journey, and you need to start moving on your journey, and you need to start moving upwards to increase your asset management capability towards the optimizing stage. As we shall see later, the optimizing stage is that stage where you can extract the most value, and that is why you have a very wide base over here. You can extract the most value at the most optimized cost, so without wastage of expenses. So you realize that by embarking on a journey of good asset management, you'll be able to move from a position where you waste 30% of your cost of your expenditure. But if you move up your asset management on your asset management journey, you'll be saving up to 27% of wastage, and you can actually improve even better. But at least by the time you're in the optimizing stage, you are really saving a lot of money. And so over 75% of organizations are really in this. And for crying out loud, it's important that organizations really start on their journey to better asset management after they've done a health check, which we looked at in one of our previous webinars. Now, I'm saying that for you to embark on any asset management journey, like we say, the asset management is the journey, it has a destination. You cannot start moving to a place where you do not know where you're going. So you need to know where you're going and what you need to do to get there. One of the things you need to be able to understand before you start on your asset management journey is to understand what the asset management definition is, because this is very key to know what you're trying to do. Now, asset management is defined as the coordinated activity of an organization to realize value from its assets. Now, the keywords here being coordinated activity, then realize value from its assets. Now, this is an ISO 55000 definition. The ISO 55000 definition started in 2014. That is when this discipline of asset management was more regularized and defined to come up with what should be looked at as constitutes asset management. Before 2014, we had a set of principles under PAS 55, and we did not have that passed as a standard until 2014. So if you say we're trying to realize value because of this definition, what are we talking about? Value can be looked at as the financial return of that asset in terms of investment. What is your financial return on investment on an asset? If you bought a pump at 20,000, I like to give the example around pumps. If you bought a pump at a fuel dispensing pump at $20,000, for example, you want that its reliability, or you want to recoup a significant amount of value from it. You want to ask yourself, how much business has it brought to me? And if it has brought little business, then you can say it has little value. So that is one way of looking at the value you want to realize from your asset. Another realization you want to do is to have a good perception about your brand. your brand, the brand that your assets will bring to you. We all know that wherever there are good assets that seem to be well maintained, they look nice, there's a nice feel around the assets, maybe they are comfy. The word runs out at the moment, but the look, the feel actually is one that you want to be around those assets. Now, the more you want to be around those assets, if it is an organization, people will want to drive in, for example, to make sure that they enjoy your services. Now, the other value you want to extract from your asset is the level of service that it brings to you. We know that the more you make your assets reliable, it means you are guaranteeing a level of faster, but I hope that you'll be able to pick some stuff so that you can go back to your other work. So yes, we are done with the definition of what asset management is. So we know what asset management is, and what does it involve? Asset management involves what I call a crop balancing act. As you can see, I have a beautiful crop over there, very healthy plant. And what is the crop balancing act? The crop balancing act involves first of all, costs. You need to balance your costs involved in the life cycle of an asset. These can be acquisition costs or asset creation costs. They can be maintenance costs. They can be, let's look at the whole life cycle as we shall see it later. You need to balance the costs across the life cycle of the asset. The other thing you're going to be balancing, you're going to turn on the knob and say, okay, how much risk can I control? Terribly sorry for that mishap. I'll just continue with my presentation. We seem to be having some mishaps, but yes, I was just saying that asset management involves what I call a balancing act, and that balancing act is what I call the crop balancing act. That is for purposes of really helping you to memorize what you're going to be doing as far as asset management is concerned. So over to the next slide, and on this next slide, I'm going to start on the 6 factors that you need to consider when you are planning to start on your journey to better asset management. So for each of these 6 factors, what I'll do is I'll give you the aspirations that you need to be looking at. And these aspirations, for me, let's look at them as goals. What are the goals that you should aim to achieve? Now, the goals of these aspirations represent what the people in the optimizing stage, the people who are at the optimizing level, have done so well. So because they've done them so well, you want to be able to emulate them. So what do you do, or what should you aspire to do as far as the people element is concerned? Firstly, and very key, is you need to make sure that you have trained and competent staff. Without trained and competent staff, you're wasting your time, because you will not get the level of asset management that is required. So the capability of your team or of your people is very important. Then you also need to get strong asset management leadership and board support. Now, the leadership has to be top down and down to the top. So it has to be aligned. If it is not aligned, in the sense that what you agree to do is what the organization invests in, then you will not get any asset management activities going on the way they should be, just because there is a conflict as far as the leadership is concerned. The next element around the people is the team structure. Now, this team structure is very important, because what you need in these organizations is a collaborative team approach. Earlier, I said that you have all these silos working alone. They have their own way of looking at assets. They speak their own language as far as assets is concerned. So they make their own decisions around assets. At the end of the day, the asset is going to be very costly. What you need is a collaborative team approach to be able to manage that asset very effectively at the least cost. Another key aspect of goal you need to create is a good culture that involves good attitude and behavior towards assets. You move in organizations and their assets are really not well maintained. We realize that in the area of culpability, what they have is a fixed asset accountant who really is interested in fixed reporting, reporting for financial purposes, or because their audit concerns, or because their financial compliance concerns. So you don't have a trained person. There's no training in asset management. Then the leadership basically is not aligned. Then there's low team structure and low culture. The other one I'll quickly go to in the interest of time is strategy and planning. Now, strategy and planning, what should be your goals? I'll highlight two very important goals here. One is alignment, is what we call alignment. Your asset management policy and objectives and the strategy should be aligned and should be in sync with your organizational objectives. So you start with the organizational objectives, and then you work backwards to determine your asset management objectives. Then you work backwards to determine the strategy you will get. Then you work backwards to determine the policy environment as far as your asset management environment is going to be concerned. You need to align that. If it's not aligned, you're not going to achieve any good asset management. Then two, your aspiration should be that you should have these plans documented, established. You need to have your strategic and planned asset acquisition. You need your operation plans should be developed. Your maintenance plans should be robust, and your end of life cycle activities for optimization should also be defined. In other words, you know when you're going to do your shutdowns, your outages, and things like that. All those help you to manage your assets more effectively, and those should be your goals. The other element that the other factor that you should be considering is what is called asset management decision making. And what should you be looking at? What should be your aspirations as far as asset management decision making is concerned? One, you should have a framework for the decision making across the entire life cycle. That framework is saying this is how we make our decisions around asset management, and that is very key. The other consideration you want to have is the decision support tools that you might want to use. Before we repeated this, one of the participants wanted to know the decision support tools, so I've included them in here, which some of them can be lean, which focus on the collaborative team effort that I was talking about, where your tool at that moment is designed around meeting as a collective to make decisions around your asset management, and you make decisions. Then the Six Sigma is really around manufacturing. It's also, I'm not going into details of that, but it's also another support tool that you could use that really supports your decision making. And there are two others which I may not be able to go to in the interest of times. But then this is the other consideration or aspiration that you should be doing. You should make sure that all your decisions aim to do what I call the crop balancing act. You're going to be asking yourself, am I trying to extract maximum value at the most optimal cost as I make this decision? Now that is very, very key. And lastly, and very, very important and very, very critical, all decisions should be data-driven. And this is possible to be, the decisions can be data-driven if, as a collective, as an organization, the maintenance, the engineering departments, the administration department, the finance departments, if they have a common thinking about the objectives around those assets, it means they have a pool of information, and that pool of information becomes the basis around which they make their decisions. Now, so all decisions should be data-driven. If you're going to buy a laptop, make it a data-driven decision. If you're going to buy if you're going to buy a tractor for Muvende, if you're going to construct a road, if you're going to whatever intervention you're trying to do, please make it data driven. And this is where the fourth aspect or the fourth key factor you should consider is very important: your asset information. What should be your goals around this? One, we've already covered this in some sort of way: your data sources. Make it a collaborative database. In other words, maintenance, engineering, admin, finance. Have a collaborative database, a collaborative data platform, so that you make decisions around your asset with the aim of extracting the most value from it at the least optimal cost. So that is very important. And then the data quality, it should be updated and reliable, and you should check that it meets the information requirements. That means as a collective across the organization, you've agreed on what kind of data you should be collecting around your assets. That defines your quality. And then what information systems? Now, these information systems are ones that should guide you to make quick decisions. If you want to make quick, instant decisions, you need to get the most reliable information system. And some of the information systems you observe in most of the companies are either paper forms, as you can see over here, or there will be Excel spreadsheets. And yes, they are systems. If they're the ones you have at the moment, make sure you maximize or develop systems on extracting as information or creating good information within those systems. Otherwise, move on to the next level and get better information systems. The other aspect that we want to make sure that we are considering as we start our asset management life journey is what we call life cycle delivery. As you can see, I just want to highlight it over there so that you can see what we're talking about. Your asset life cycle delivery should make sure that it's looking at these areas and more. How do you plan? How do you budget for that? How do you acquire the assets? How do you operate the assets? How do you maintain the assets? How do you do decommissioning? You should look at your asset life cycle in these and more, depending on the kind of assets you're looking at. Because some assets involve creation. For example, you're going to create a dam, or some assets are already in existence, they're already in form, and you're trying to acquire them. But look at your life, the entire life cycle of the asset to be able to make good asset management. Now, so what should be your goals in this area? Your goals should be: one, the activities should be executed according to developed plans. All these should be done according to developed plans. Nothing should be done out of plan. Okay, let's say to the greatest extent within plan, because there are always contingencies and emergencies. But of course, there are also contingency plans as well. So even contingency planning is part of asset management planning. Then the other factor you should consider is the strong systems. Your goal should be to have strong systems as far as asset management is concerned. And what are these strong systems? The strong systems ensure that everything is done in a coordinated manner to achieve consistent outcomes. And these consistent outcomes basically relate to your asset management objectives. So if your strong systems are making you achieve your asset management objectives, yes, then you're doing good asset management. So in your goals, as you start on your journey to better asset management, what you want to do is to have as a goal to create strong systems for your organization. And lastly, the last factor you want to consider is what I call risk management. So what should be your goals in this area? Your goals in this area, I'll talk about two particular aspects of this goal. One, you should have done your risk assessment very well, and that there are risk mitigation measures that are in place to manage any eventuality. Because when things happen, you want to be able to continue seamlessly. So unless you excuse me, unless you've done a good risk assessment, then you may not be able to manage your assets properly. The organizations that you saw in the optimizing stage are those that have done a thorough risk assessment. And the beauty of that is they've also done good contingency planning and resilience. Now, what does that mean? In the event of adversity, your planning should be such that you can actually continue to operate. And adversity is something that really happens in a very, the dimensions of this event are such that the organization, the continued existence of the organization is threatened. However, if you've done good risk management, the continued existence of this organization will be enhanced. Some of the risk management criteria for this contingency planning will be things like insurance, will be things like quite a number of things, but because of time, unfortunately, I may not be able to go into that area. So those are the six factors you should consider. So what should be your first steps? If you know that these are the 6 factors you're going to consider. What I have over here is I'm looking at each of the 6 factors, and I'm saying for each of these 6 factors, make these first steps. These represent your first, let's call them goals, or as I was presenting, I was calling them aspirations, but let's look at them as asset management goals. 1, in the area of people, make sure you have stakeholder training, because you cannot have people doing good asset management, or you cannot have them understand what plans to develop before you train them as far as asset management is concerned. Then you need to define their roles. You need to give them deliverables as far as your asset management journey is concerned. That means over time, this is what these people are going to deliver to me as far as incrementally increasing my asset management goals. Then in the area of strategy and planning, as a first step, okay, develop your asset management policy, because that asset management policy defines the rules of engagement as far as your asset. Yes, I was saying that in the area of strategy and planning, what you need to do is to make sure you've developed your asset management policy and you've determined your asset management objectives, which represent your goals. Then in the area of decision making, what you want to have is to start with the lean approach of decision making, where you have a collaborative platform that will make decisions around your asset management. So you have your maintenance, you have your engineering, you just initially create a team that collectively decides how you're going to make decisions around asset management. Then the other element on asset information, your first step should be determine your data and information requirements. After you've determined that data and information requirements, which you definitely get from the collaborative effort of the whole organization, you now need to collect and update your data in a very systematic and timely manner. So you need to define how you're going to be able to do that. Those just represent your first steps. Then as far as life cycle delivery is concerned, you need to define your processes and procedures. You're going to say, this is how we shall do our asset acquisition. This is how we shall do our asset maintenance. This is how we shall do operate our assets. So this is something you really define initially. So after you've defined your processes and procedures, you now need to design your systems. How do you interrelate with other aspects of management? So when you design those systems, it means you're saying these people, these processes, and then these plans, all those collectively make up the system. So you need to design those systems. Initially, you will not be having them. But when you design them, it's a step towards better asset management. Then the first step you want to do in your journey to better asset management is to do risk management. That is, you do a critical risk assessment, an assessment of your critical assets in terms of risk, of course. So you do that, and those represent your first steps. In concluding, I've really rushed this presentation because I would like you to go and do other work. These would be my conclusions as far as your journey to better asset management is concerned. One, you need to know that the journey is a series of incremental efficiency and performance improvement to achieve total alignment, stroke optimization. What we saw was that for you to be able to do good asset management, you need to align your plans with your activities or with your objectives. You need to align with your plan with your objectives. So the moment you do that, you'll be able to later optimize. The guys who have done this so well are the ones who are in the optimization stage of asset management maturity. They have good systems, they have good policies, they have good plans, their people are well trained, they have good information systems, their decision making is excellent. All that is because they have made an effort to embark on incremental efficiency and performance improvement. Lastly, also, you need to be able to take that first step. You'll not be able to start on this journey unless you make these first steps. Usually, we don't make these first steps because we are not aware, we are not sure of what to do. But now that we know what asset management is about and what the considerations should be and what your possible first steps can be, please make the first step. Then, as you make the first step, and you embark on this journey, you need to know that the benefits of investment into your asset management program far much outweigh the costs involved. As we saw in the second slide, the second or third slide, you have over 27% savings on wasted expenditure. This can be much more depending on how you value, you define the value of your assets. So yes, it's very key that you invest, and because you now know that it's going to be, your investment is going to cost you a bit, but the benefits of it far outweigh whatever you spend in it ultimately. And so I would really encourage every company to embark on this journey. Lastly, I'll just give a rhetoric question for you to answer. You can answer it anytime, and probably I'll give you another rhetoric question. Do you have an idea how this impacts on your bottom line if you embark on the journey to better asset management? You can answer that in your own time. But then let me give you another consideration as you think about this. Think about an issue like, and this is just one aspect of it, an issue like insurance. Insurance, when you're insuring your assets, they usually ask you, what is the value of your assets? Our observation has been that when organizations are asked to present their value, they'll present their value based on the invoices. And I realize that presents a very critical problem. One, those invoices do not give a true reflection of your asset value because, for example, they've not been depreciated. An asset has lost value, but you're making your decision based on assets that have not been depreciated. You're also making your decision on assets that may not be physically on ground. Our observation has been that for these organizations that are in the 75% category, over 25 to 45% of the assets that they think they do have on their asset register actually don't exist. So you're actually paying premium you're paying a higher premium on ghost assets. So that concludes my presentation. And in the remaining time, I would like to see if I can quickly respond to a few questions that came through. And I'm
Chris?
afraid, yes.
Thank you very much for your presentation. Sorry to interrupt. I think because of time, I'd like to just acknowledge there's a question, a very crucial question I saw from Mr. Ahmed from National Assets, Somalia, if I'm right. Just to tell Mr. Ahmed that his question will be answered, I think, via email because of the lack of time. And also to remind everyone that the slides will be shared via email. We have your emails to the registration process you went through. Certificates will also be available to anyone that stayed with us for the entirety of this webinar. I would like to thank you again for spending this time with us and to also apologize for the few technical mishaps we had. We would like to have you for the next webinar we have. Thank you very much for attending.
Elijah, may I say something small before we close?
Briefly, yes, you can.
Yes, ladies and gentlemen, thank you very much for logging in. We really appreciate that you've come in to just listen to Chris share about asset management. We shall be organizing a training in June 22nd and 23rd. So please just watch out for the communication that will be coming to your emails. Thank you very much. We really apologize for all the technical glitches and we really appreciate your feedback. Have a good day.
Thank you.
Thank you so much. Thank you so much.
Welcome to this short video on strengthening the systems of your organization. Do you have persistent issues in your organization that never seem to go away? For example, when a staff on the team leaves the company and operations or any other aspect of your business is affected, or managers in the company micromanaging, or your service level being inconsistent because it depends on the staff member on duty, that is a telling sign that your organization has weak systems. So what are systems? Systems in an organization refer to the sets of activities that should be spelled out so that they are performed in a coordinated manner to achieve specified outcomes consistently. People do not underpin effective systems. A few organizations have their systems clearly defined and typically they run smoothly and are sustainable. But for very many others, the systems are not clearly defined or even not defined at all. In such organizations, when staff leave, for example, they leave with their experience and this interrupts business operations. Many organizations resort to hiring short-term consultants to perform different tasks to be able to ensure continuity, and this is done over and over again. This is quite costly and the risk of operational disruptions is retained, which threatens business sustainability. The primary goal of the consultant is never to build the systems to reduce dependency, but to deliver on the current requirement. Building strong systems and structures to create mature organizations takes considerable effort as well as know-how, which is attained through years of experience. Even while your staff may have the skills and knowledge to build the systems, the level of effort required makes them focus more on their performance mandate. But do you know that the only thing that is in the way for organizations with weak systems is a four-letter word: risk? At Asset Business Solutions, we have built a number of products for the operations and finance departments that are designed to manage risk, with the objective of unlocking the potential of the organization, driving its performance, and enhancing sustainability. Issues that may arise are few, they are anticipated, and can quickly be resolved because the organization will be grounded on systems and not individuals. We shall aim to support your team so that while they focus on their core performance mandate, we shall put in place a mechanism that will allow the organization's internal controls to continuously respond to the changing factors in their environment. Get in touch with us using the contacts shown here and let us share with you some internal control manufacturing tools that can change the course of your organization.